The ECB cuts another 25 basis points as expected. Global markets are firm ahead of next week's big decision by the Fed. India's inflation is firm, but the Reserve Bank of India is still on track to ease from December. New Zealand inflation was a bit above forecasts, but not enough to concern the Reserve Bank of New Zealand. That's coming up in our 5 Things in 5 minutes. And then in our bonus deep dive interview, Australia-Asia Society CEO Anthony Berbelo analyses the key themes at the recent ANZ-sponsored AFR Asia Summit in Melbourne.
I think in terms of how you work through all these geopolitical issues and how it works into your business, I think is something that corporates are still trying to grapple with.
But first, in 5 and 5 with ANZ, the European Central Bank cut its deposit rate by 25 basis points to 3.5% overnight, as expected. ANZ economist Bansi Madhavani says from London that the ECB emphasised it's not on a predetermined path.
The tone of the guidance and comments from the press conference indicate that the ECB will stick to its slow and gradual approach to easing that they have adopted so far. We expect the ECB will cut rates one more time in the fourth quarter. After the policy decision, the euro firmed up slightly as comments from the ECB were perceived to be somewhat hawkish, and bond yields in some markets, such as Germany, also rose across the curve.
Global stocks and bonds were mildly firmer overnight, with the focus turning to next week's decision by the Fed. Market expectations the Fed might cut a full 50 basis points kept falling, now down to 5%. That's down from 25% at the start of the week. Markets now see a 25 basis point cut as fully priced. As of 4 a.m. Sydney-Melbourne time, the US dollar index was down 0.3%. US Treasury yields were up 1 to 3 basis points. The S&P 500 was up 0.7%. The Aussie dollar up 0.67% at 67.16 US cents, and the Kiwi dollar up 0.5% at 61.69 US cents. Number 2. The last partial New Zealand inflation data before the Reserve Bank's October monetary policy review came in slightly stronger than expected in August. But as senior economist Miles Workman says, it's not enough to offset weaker prices in July.
In terms of big picture story, where we are seeing some of the surprise to our view, it's really coming from the more volatile side of the CPI basket. So that's things like petrol prices, for example. And that's largely a global oil price story, which, for the Reserve Bank, who are primarily worried about sticky domestic inflation, that's the non-tradables side of the basket. These data certainly aren't a game changer.
Number 3. ANZ's Trachometer Index of vehicle movements in New Zealand was pointing to ongoing soft activity in August, indicating weakness in GDP will continue in the current third quarter. ANZ New Zealand chief economist Sharon Zollner says there's a pretty simple antidote to that soft activity.
This recession has been a bit of an unusual one in the New Zealand context, insofar as it's quite normal, which is a funny thing to say, but essentially normally when we see rates being cut, it's because something bad has happened, typically a global shock, though we've also, of course, had pandemics and earthquakes and the like. But in this instance, this recession was deliberately caused by tighter monetary policy, and so it's reasonable to expect that the cure is going to be lower interest rates.
Number 4. In data out overnight from India, we saw that annual CPI inflation rose to 3.65% in August from 3.54% in July. This was in line with ANZ's forecast, but was a bit above the market consensus on 3.47%. ANZ economist in India, Dhiraj Nim, says the Reserve Bank of India will want to check food inflation keeps falling through October and November before looking to ease at the end of the year.
All of this could mean that they tone down their hawkishness in October, but not announce a stance change to prevent markets from running ahead with dovish expectations when a decisive victory on inflation can't still be claimed. Overall, we maintain that the rate cuts may start from December.
Number 5. In Japan, the prices that goods producers pay fell 0.2% in August from July, the first time it's fallen this year. ANZ FX analyst Felix Ryan says the weakness shouldn't be a game changer for the Bank of Japan in terms of its policy to normalise, which means raise, interest rates.
From the Bank of Japan's perspective, there's a lot more focus for them on the domestic-driven services-led inflation rather than the goods-based or imported side of the equation. Certainly we've seen in the Bank of Japan communication just this week from board members Tamura and Nakagawa that there's a lot of focus on wage pressures as a potential upside risk to prices as well, and a desire to reach that 1% neutral rate as well by the end of 2025.
Felix Ryan there. Now, in our bonus deep dive interview, Australia's Asia Society CEO Anthony Berbelo says the key themes at the recent ANZ-sponsored AFR Asia Summit in Melbourne included the rise of geopolitical developments as something businesses are having to figure out how to grapple with.
I think one of the things that the summit has validated is, and it's something that we've known for a while now, is that you cannot disentangle the discussion of Australia's security in Asia from the discussion of Australia's prosperity in Asia, and that's actually, those two things have become much more intertwined. It used to be, and it was never quite this way, but, in the old days, the trade minister did trade and the foreign minister and the defence minister did their thing. But in the last few years, as geopolitics has increasingly shaped the global environment, in many ways overtaking globalization as the kind of the key shaping idea, it just means that security and prosperity are two questions that you have to consider, and there are potentially trade-offs and there are synergies. But you can't have a conference on Australia's relations with Asia that is just focused on security or just focused on prosperity. Now, we designed it that way, but I think what the conversations have validated is that's right, because in every single panel, even if a panel that was focused primarily on prosperity and trade, the security, the impact of geopolitics on investment and on trade has come up. On panels that are, they're talking about defence or strategic issues, the impact of, is the region descending into different trading blocks, and protectionism in industry policy has come up. So I think that's a very clear takeaway. It's not new, but it's a validation. The other thing I'd say is, the strong theme is that, Australia is doing well in the region, and we've had lots of examples of Australian companies that are doing well, and beyond what we already know, right? Beyond the resource companies and beyond the food exports to the region. But that strong sense in every panel, and you saw it with the foreign minister's address as well, that sense that we could be doing a lot better. And there's that question mark about why is it that there still seems to be large parts of Australian business that don't seem that comfortable operating in the region, much more comfortable operating in Europe or the US. Why does the government have to articulate a Southeast Asia economic strategy, for a region that is one of the most, fastest growing in the world and the most dynamic, with lots of problems, true, but why do they need to be even telling business to go there? And why is our foreign minister expressing her frustration that even with this effort, it still seems to be hard to get business to think about the region?
Do you sense the business community is shifting the way it's operating in this new era? We've had 30 or 40 years after the Cold War where we could take peace and security for granted and just focus on trade. Are businesses starting to do things differently now?
It's very hard to tell. I think, clearly the one thing that we do strongly sense is that businesses and boards are much more interested in geopolitics and what it means for them. What they then do with that, I think, is still the kind of the question mark, because it's not like a few years ago, boards suddenly realized they had to get interested in cyber, right? What do we know? We have to protect ourselves from cyber threats. The difference is with cyber, they knew that they could do something about it, right? Almost 100% our company's going to be under a cyber attack at some point. So we have to do something in terms of putting in place policies and structures to guard against all that stuff. What do you do with the geopolitics? How do you build that into, risk management or hedging strategies? I think it's very difficult. So I think we're at that point where they understand the importance, they understand that they need to think about geopolitical risk, and not just risk, but also the way the geopolitics is shaping the regulatory environment and policy. And the regulatory stuff is a bit simpler because it's like the government says, well, we don't want you selling sensitive technologies to China. Okay, so we can't do that. But I think in terms of how you work through all these geopolitical issues and how it works into your business, I think is something that corporates are still trying to grapple with.
Australian Asia Society CEO Anthony Berbelo there, speaking to me from the recent ANZ-sponsored AFR Asia Summit in Melbourne. I'm Bernard Hickey. That was 5 and 5 with ANZ for Friday, September the 13th. Catch you next week with data on how well China's economy is performing. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.